I'd like to welcome everybody to my little channel. Is that something that people say? We're going to say that just
Okay.
because we can. Okay. Good morning. Go ahead, Michael.
Do you say it in Spanish? Like,
Sí,
hola
buenos
y bienvenido.
días. Bienvenidos, amigos. Estoy aquí con Mike Boch y él es el prestamista con quien yo platiqué la semana pasada. Le hice a él muchas preguntas y él tuvo la gracia de venir aquí conmigo y platicar acerca de los préstamos usando su I-10. Y antes de empezar, les quiero decir que este video sí va a ser en inglés, pero lo voy a traducir en español para que ustedes sepan todo lo que vamos a charlar y vamos a empezar así, ¿ok? Así es de que vamos a empezar ahorita. Hi, Michael. Thank you so much for being here.
Thank you for having me. Great to be here.
Yes, well, I told the Latino community out there or Spanish-speaking folk out there that you are the lender that I had spoken to last week about using your I-10 in order to acquire home loans.
Yes.
And as I explained to you, there's a lot of community out there that would like to have that American dream and purchase their first home, and they don't have much except for the I-10. And there's a lot of questions out there, and my goal is to have you answer them for me, and then we can translate this in Spanish. How does that sound?
That sounds fantastic.
All right, awesome. Well, quick question for you, Michael. Where are you originally from?
Well, let's see. I recently moved to Kentucky about 4 years ago. We were on the West Coast, down in Oregon and Washington, and I was an independent consultant, and I had a bunch of farms and factories and distributors and various clients.
Okay.
And so, it was. We just decided it was time to raise our family in a little more rural area. So we came out to Kentucky, and it's been fantastic.
Good. Same. Yeah. Well, we're here about 4 years as well, and I tell you, I'm falling in love with Kentucky more and more all the time.
Oh yeah, Kentucky's fantastic.
Yeah. Tell me, Michael.
It's like a hidden gem.
Yes, I agree. What company do you work for?
Well, I work for Clear Mortgage and City First. What we are is we're an independent, delegated correspondent lender. So we work. We have folks all over the country, but primarily all that big mouthful of words means is that we're able to lend our own money. We're able to. What sets us apart is that we turn around and we sell those loans to other agencies and banks and that type of thing. So that puts us in the catbird's position in that we can shop all of the banks, nearly all of the banks, tons of different investors and all the agencies all at the same time. So that way I can find you guys the very best rates, the very best deal at any given moment. And oftentimes that means where other banks will say no, I can say yes, because I can find a particular investor who wants to fill a gap in their portfolio, and they'll say, hey, we've invented a new loan program to catch gap scenarios, and they'll share that with me, and then I'll be able to extend that out to our customers.
And if somebody wanted to reach you and ask you more questions about the programs that you offer, how would they do that?
Well, you can go to our website. The easiest way to remember it is I built a transfer website called mybestloanrate.com. What that will do is redirect you to my actual individual page through Clear Mortgage. Okay. But again, that's mybestloanrate.com. And I say that because we can actually get you your best rate. But that said, that's the easiest way, and that'll have my contact information on there.
All right, beautiful. Thank you so much for that. Okay, well, let's jump right in and discuss I-10 loans.
Certainly.
Okay, one of the first questions that was important for me, and I think that it's out there for the community that would be using I-10, their I-10, is what is an I-10, right? First, so keep me honest here. I looked this up. I-10 stands for Individual Taxpayer Identification Number.
Yes, that's right.
Is that right?
Yes, that's right.
So this actually prompted a new question for me.
Okay.
Because a lot of people say, well, yes, I can use my I-10, but then they tell me that I also need an ID. But identification is in the wording here. Isn't that enough of an ID?
Well, that's a little bit of a chicken and egg scenario, right? Okay. So in order to get an I-10, you have to apply to the government through a W-7. And that can take, anywhere between 4 and 6 weeks. But what that does is it's for individuals who don't have Social Security numbers. But just as you can imagine, when you go get a Social Security number, you have to produce an ID, the whole 9 yards. So you're going to have an ID anyway. In order to get the I-10, and in the process of applying for the W-7, you're going to have to prove your identity. So with your own a government-issued ID, that's also part of the process. Sometimes a birth certificate, various other forms of identity. They need to know that you are you. Once they do that, then they grant you that I-10 number, which opens up basically the American dream for you, because then you can participate, even though you're not a full U.S. citizen at that time. You can still participate in the American dream of home ownership and a lot of other programs and advantages. And that's a really key point, because I feel like the I-10 programs that we bring to the table they open up the opportunity for families to basically build wealth for the first real time in the United States, that are in opportunities that were normally reserved just for citizens. But obviously, you folks come to the United States, participate in this great nation, and the home ownership. I just saw a study the other day. Homeowners generate wealth 43 times faster than merely having a savings bank account. So it is literally the key to unlocking generational wealth.
I'm glad that you brought that up, because I think that for many of us out there, including myself when I was younger, I thought that buying my first home was just that, buying my own home, which brought me a sense of security, accomplishment, and mostly that, security. However, now that I am in the real estate industry as a realtor, builder, whatever labels we want to put onto me, that's fine. But I'm learning more and more about this industry. And what I realized that buying my first home or buying a home is not just about that security and having that home, but it's also the first step to becoming a real estate investor.
Yes, absolutely.
Right?
Absolutely. Yes.
It's an investment. And I'm Hispanic. I'm from El Salvador, so I feel like I can speak to generally, how we think. And for us, family is extremely important. The bonds of family for us are immense. Sometimes a little bit too much, but that's okay. I still love it.
Right.
However, it's for us extremely important to be able to provide to our future generations, our children, and make sure that they are safe. And it's just a cultural thing, you work hard for your children, and when you can't work anymore, your children will continue to work and then take care of you in your elder years. And having a home is the first step to creating that wealth, and you don't have to stop at just one home. But let's get to a couple of questions so that we can keep this video in a time frame that is digestible for all of us. All right. One of the questions that I asked Michael when he was here last time is, what are the minimum requirements to qualify for an I-10 loan? Now, that question in itself is quite loaded, because there's a lot to it. But can you help me break that down, Michael?
Yeah, absolutely. So I like to break it down into different categories. In some sense, you'd say, okay, there are the prerequisites. They're the things that kind of have to be in place from a regulatory standpoint. Then there are also the things that have to be in place with respect to the earnings power, being able to repay the loan and provide the sufficient assurity to the bank that loan, it's lend worthy. But oftentimes, before we delve into those, which there are a variety of different requirements that way, and some banks require more, some others less, and some have various exceptions and blah, blah, blah. I think the most important category of all literally is the will. If you have the will to navigate and pursue an I-10 loan, we'll find a way. And so I think that's really the first thing. Is there will? Is there desire to achieve this? And if so, I can work with you. And sometimes it's just a matter of dispelling some unknowns, and we can do it in 30 or 60 days. Sometimes there are other obstacles where we say, hey, you know what? We need to put a few things in place, and it might take 6 months. It might take a little bit longer, but that's fine. I'm willing to work with you for as long as it takes. But for the most of the folks, when they're ready to go, if they have the will, we can get that done very quickly.
I really appreciate you mentioning that because I feel like I'm this authority figure here when it comes to speaking for the Latino community. Mm-hmm. One thing we do have is a strong will, right? We're here to succeed and to survive, and we're here to do more than just survive. We're here to succeed. And so the will is certainly there. Obviously not for everybody, but here we are to give you guys the information, and what you do with it is completely up to you. But I know that those of you who have been wanting to hear more about this, the will is already there. So let's see. There's a train of thought that I had. I might have to cut this out when I edit, but that's okay. But let's talk numbers, Michael.
Yes.
Let's start very simply. Do I have to have credit history in order to qualify for a loan using my ITIN?
Most of the time, the answer is yes. However, I do have a few investors that participate with us that say, no, you don't have to have a credit history. In order to qualify for those programs, they do have other ways of determining credit worthiness. And what they will do is, in the absence of a credit score, they will impute a 700. Okay, so 700 is a fantastic score. How do they arrive at that? Well, it boils down to what is a credit score? What is it trying to do? A credit score is basically a means of measuring the somebody's ability and willingness to repay their debts as they come due. Mm-hmm. Normally, that's measured by their past performance. Past performance is a great indicator of future performance. But in times when we don't necessarily have a prior relationship with other lenders and other credit institutions, we don't have a credit score, but we can still, with these other investors that we have, develop ways in which we can, as I said, impute one or get one. Generally speaking, though, most of us have credit scores. Almost all of us do, and that's in terms of if you had purchased a car, if you had even other revolving credits like credit cards or merchandise credit, that type of things. Those are going to help us build credit, build a reputation, as it were. Think of it in terms of like the banking industry wants to see, all right, they have their own version of social media, and it's like, how have you treated other lenders that have had a relationship with you in the past? So most of us will leave those fingerprints and those things, and they will develop their credit score. The three agencies that monitor them, and generally those scores need to be, most programs require a minimum of a 660. Some are at 680. I can go all the way down to 650 on some of those. If you have 720, 740 even, then even better than that. They're really, the added benefits of having higher than 720, 740 aren't nearly as impactful as getting from that 640 up to 660. Okay. But so it's a range of answer, I guess. But does that help?
It does help, and I know that maybe to some out there that might have been confusing. And okay. So, however, we can chat another time, Michael, about and simplifying what credit history is, and provide maybe a graphic, depicting a graph of what credit is. But basically, it's your ability to be able to repay your debts.
Yes.
Now, in the
one measure of that.
One measure, okay.
Because there's a couple few. One is your ability to repay the debts is based on what's your income, naturally. Another metric that they use is, okay, what about your existing assets that you have? What have you already acquired? Because those are also, they empower your ability to repay. But the credit score is more focused on a mathematical representation of your prior habits. So you might have all the assets in the world. You might have a great income, but if you've never repaid prior debts and make them take you to collections, you're going to have a terrible credit score.
Right.
One more key thing I think I'll mention that is that the credit score is not the end and be all of it. It certainly is a requirement, but I have tools in place and I have partners that help you build credit. So if you have a lower credit score and you're concerned about, okay, do I qualify? The answer might not be no, simply. It may be, hey, not yet. So to keep that in mind, that we can, on the short term and the long term, we can help repair, build, and improve your credit score to get you qualified and even get you better deals down the road.
That is so good to hear, knowing that there are ways of getting through those roadblocks is fantastic, because I think that part of the problem is that there's not a whole lot of information that people can rely on. And so, not having the information is what sometimes paralyzes some of us, right? And what I wanted to talk about as well is that for a lot of us in the Latino community, it's a cultural thing. It's very different. Credit to us is seen as negative versus a positive thing. In other words, here, you have to have credit history. But for us, in my culture, if you had to ask for credit, then you were looked upon as someone who didn't have the means to pay today for what you need. So we're used to wanting and needing to pay for what we need and want all at one time. Getting credit was seen as a negative thing, right? So that is a cultural conception that we have to recognize and also adjust.
Yes.
Okay, here in the United States, being in debt, but proving that you can pay it and have the means to pay it is what's going to help you. So if you have been here for years and you've been doing the right thing and paying everything for in full and in cash, I bow my head down to you and say kudos. However, that's not going to help establishing credit history. However, how to establish credit is going to be a conversation that we'll have another time, because I want to focus today on the ITIN.
Yeah, very good. Very good.
Next question I have for you, Michael, is, okay, we go through the process and I know that I can move forward with the purchase of a home. What is a reasonable down payment that I would have to provide?
Okay. Most programs require 20% down. So it's measured by what they call loan to value ratio. So if you put 20% down, that means the loan to the value is 80%. I have some programs that go down to 15% down. That is one area in which ITINs are in fact more restrictive than the FHA and that type of thing, because fully naturalized citizens can put as low as 3.5% down. But we'll get there. We'll get there at some point. And but for now, it's 20% down, some with a premium, 15% down. But know that the more you put down, the more likely the lender will qualify you and become your partner in home ownership. However, it is a double-edged sword in some sense that, and I will help you navigate this, because it will make more fiscal sense, say, for example, that you could put 30% down. If you qualify with only putting 20% down, then what we'll do before we commit to, say, the full 30% is we'll look at what is the interest rate we'll get at that approval rate with 20% down. And we'll say, okay, would it make more sense to put the full 30% down and get a potentially a better rate that way? Or would it make more sense to only put the 20% down and then use a portion of that remaining 10%? And what we say is buy points down, because you can encourage the bank to give you a lower interest rate by giving them a little more money up front as interest expense. And so oftentimes it works out better for the borrower to put a lower down payment, so they reserve some of that cash to buy down their points. And I've seen, for example, you can get a 1% typically interest reprieve, that is a lower interest rate, by as much as 1%, 1.5% sometimes, with only a few $1,000s. Whereas the difference, when you're looking at say a $300,000 home, 10% is $30,000. So if you can put down a full, let's say $90,000, you're actually better off putting down 60, provided the other requirements are met and the bank lends you, and then keeping that $10,000 to put a portion of that in buying down the points. You'll end up getting a better rate overall. But that's something I'll help you navigate. And it's not the same at all times, and it's not the same with every vendor or every lender. But that's part of what I do. I look for the deal.
And also, just be assured that we will break down some of this terminology in future videos so that we all understand what buying points means. What is a point? So, yes, there's a lot of lingo here that may be unfamiliar, and that's okay. And I'm learning all the time. Michael has taught. The first time we spoke, I learned a lot of new things. However, it is important to break things down into small bite pieces for those of us who need it, right?
Yeah.
And so I do appreciate you bringing so much knowledge, Michael. It's quite refreshing. Okay, and I'm going to go ahead and ask one last. Oh, before I do that, though, I know that. Well, let's do this.
Yeah.
Let's just do a little bit of mental math. You're probably a lot better at it than I am. And let's just say what 20% looks like if I'm buying a house that costs $200,000.
Okay, very good. So $200,000, 20% would be $40,000. So that's what you're going to need to come to the table with. Now, the source of that income, generally speaking, like I said, 20% down is most of the lenders are going to want that much for an I-10 deal. So if we don't focus on the exceptions, but just go by the general rule of 20%, that would be $40,000. Now, that money could come from gifts. It could come from your retirement. It could come from prior bank accounts. It could come from, other family members. Overseas, there are some further requirements, but basically we just have to prove. So the source of those funds can be prior savings. They can be retirement. They can be gifts. They can come from family overseas. There are some additional things that we would have to do. Not a big deal to verify those funds when they come overseas, because we have to through the Patriot Act, we have to show that the funds are in fact legitimate. There have been some unsavory characters in the past who've abused the mortgage system to hide money illegally, and we don't want to participate in that. And I'm sure, obviously. So there are controls in place to help prevent those characters from further disrupting the mortgage industry, which would hurt all of us. And so to help keep us with all of those opportunities, those are some of there will be additional steps if it's overseas, but they're not too problematic. And as long as everything is legitimate, there's nothing to worry about. At the end of the day, my approach to sourcing those funds and trying to investigate whether or not we have enough money that we can put down to get into the house is, hey, let's just try it. Let's look at it. The worst case scenario is the bank will say no or not yet, in which case we're no worse off than when we started. But at least we'll have an answer. And we very likely will have a plan by which we can achieve what we intend to do within the coming months.
I love what you said just now, because I do want to speak a little bit more about that. It's super important for us to find out where we are now so that we can plan for where we want to be in whatever time span that may be. Everybody out there has a different circumstance, and what I loved about Michael is that he said, look, I can't give you a cookie cut answer to some of these questions because it all depends on the situation of the individual. And I thought that was awesome, because that means, okay, there's wiggle room here and it can happen. Okay. I know that $40,000 sounds like a lot of money. It's a lot of money to me. And for those of us who are new in this country and are earning modest means, it can mean almost an unsurmountable amount of money. So it's about getting creative. No drug deals. This is what Michael's saying. Just don't do anything shady. I'm just kidding. I know the people that I'm talking to, that we're talking to, are not those people. Okay. But I just had to say that. But it's about getting creative, right? And how do we, and even like Michael said, if it takes 6 months or a year or even 2, it can be done. Right. One thing that we can count on is time keeps marching on. And it's a non-renewable resource. So it's best to do things to find out where we are now so that we can prepare for where we want to get to.
Okay, so a viable strategy is that you don't have to shoulder the burden of home ownership all by yourself. So oftentimes people think of owning a home as a single family residence and it's all on them. However, what you can do is you can partner with somebody, a friend, a family member, etc. And in that way, it doesn't necessarily have to be a single family residence. It could also be a condo. It could be a multifamily unit. It could be a PUD, which a PUD is a planned unit development. And basically it's a community of homes where it's either single family homes, condos, townhouses, etc., where they're run by like an HOA or a common homeowners association or a group, a business, and where all the residents pool together and afford that development, that area development. But basically what that means is by extending out the partnership, you can compound the income requirements. So for example, if you don't necessarily have enough, it's measured by DTI, which is debt to income. And if you don't have enough income necessarily by yourself, you can bring in other partners, and then that overall income expands relative to the debt load, and that improves your DTI. And we were just talking about the down payment requirement. So having more partners, of course, that spreads out that requirement among a number of them. So a viable strategy is, hey, first, real estate ownership as a group by potentially a multifamily unit, and you have it for a few years, so maybe 5, 6, 4, or 5, whatever it matters. And then from there, you decide, hey, look, I've completed my portion. I'm now ready to buy my own, forever home, be it a ranch or whatever, with just my immediate family. So I'll sell my portion back to the group or to the next investing partner. That's my down payment for my new forever home. So don't put off the opportunity to build wealth just because you don't necessarily have the down payment available to you right now. Partner up with somebody, build it together, and then piecemeal it out.
You know what? Not only is that brilliant, but it's not far-fetched, because for us Latinos, we're like little tribes. We just right? And so getting the tío to come in with the tío or the cuñado or granny, yeah, guys, this is something that we were probably already doing, right? I don't know about you, but when we first came to this country, I lived with an aunt and uncle and the aunt's husband and we were all like in this little thing. And it wasn't fun, but guess what? We got to save a lot of money and la. Here's another story I meant to say earlier. When my mother, my brother and I was 19 at the time, which was about a couple of years ago.
I believe you.
Okay, so I was 19 and my brother was in real estate at the time, and he said, you know what, we can buy a house. He found out through knowledge that, hey, it's possible for us to also have a house. And so we went through the process, and it turned out that we needed a down payment. And my mom, what she ended up doing was she sold the house that she owned in El Salvador. And she used those proceeds as part of the down payment to buy the house here in the United States. And it was a wonderful thing. That's just, what I'm saying is that there are options, right? And if we get...
that's fantastic.
Yeah, if we get our heads together, perhaps we can get, creative about where to find those funds.
Right.
And recently I was invited to a quinceañera. Do you know what that is? Okay, so here they have sweet 16. In our culture, we have sweet 15. Okay. We call them quinceañera because quince means 15.
15.
And so that is when a girl, gets to her
promenade.
Yes.
Right. Okay.
And she turns into a young lady, right? And so in our culture, celebrating a quinceañera is kind of like a bar mitzvah. I don't know how to say that.
A bar mitzvah.
Bar mitzvah,
okay.
Yeah.
Yep.
And so it's a big deal, right? I didn't have a quinceañera because we were very poor, and that's okay. But this very humble family who is very dear to me, they invited me to come to their daughter's quinceañera. I was very honored. You know what, guys? It was beautiful. It was elaborate. It was well done. It was choreographed. I mean, you know what? That was expensive.
Wow.
So what I'm trying to say, and no judgment, I'm so happy for that family that they were able to do that for their daughter, because they will take that with them forever.
Mm-hmm.
But what I'm saying is, like Michael said earlier, when there's a will, there's a way. So if you can save money to pay for a quinceañera, you can save, and I know us, we're savers, right? Except that we probably put things in a little jar or under the bed. But let's get creative, and that's what we're here to do, is to bring this information to you so that you can plan now for where you want to be later. Right. Okay. I think we have covered quite a bit, Michael. I would like to keep, wrap this up. Okay. And work with what we have right now. And there's still a lot more questions, but I would like to do is encourage you to please put your comments below, send your questions to me. We will talk about Michael and how you can reach him as well. We will place the information, somewhere here or there so that you can see it. But there's just a bunch of questions that we're just scratching the surface here, okay? Así es que pongan sus preguntas abajo, vamos a seguir platicando de esto, y quiero que sepan de que si ustedes tienen cualquier pregunta para mí o para Michael, nos pueden contactar. Y si necesitan alguien que les ayude a traducir, if you need somebody to help you translate, I'm here for you guys, okay? So, not a problem. Anyway, thank you so much for, before I say anything, is there anything else that you'd like to say as we're wrapping up?
Yeah, I'd like to offer one thing. One of the other requirements that folks often wonder about is the employment requirement. So I'll offer that, yes, generally speaking, if you have 2 years of employment, fantastic. That's the norm. However, there are a broad number of exceptions. We can do a single year. You can do self-employed. You can do transitional. Even if you've left your job to start your own business, mm-hmm. If it's in the same business, there are lots of options that way. So don't let that become an obstacle.
There's just so much more to discuss, and there are a lot of things that we can bring to your attention as far as what is needed. Again, today was just about introducing Michael to you and bringing up the topic and scratching the surface, but there's a ton of more information that we will be discussing. So, Michael, where can you be reached again, and what is the name of your company?
Yeah, so I'm with Clear Mortgage. Best way to get a hold of me or my contact information is to review mybestloanrate.com.
Awesome. Mm-hmm. Thank you so much for coming over. It was nice having you.
Great to be here.
All right, guys. Don't forget to subscribe to the channel. You can find me on Facebook, LinkedIn, Instagram, and YouTube. I'm getting used to saying all that stuff at the end of the videos. Anyway, my goal is to bring you guys information just to empower you, okay? But if you do have any questions for me, contact me. My information is down below, and I am happy to help with anything that you may need. All right, take care.